Good morning. Welcome to the CNBC TV18 HDFC Sky Election Headquarters. You're watching Trading Hour. I'm Reema Tendulkar, and with me is Surbhi Upadhyay. And Surbhi, there is no stopping this market. 23,000 has been scaled. It's a 1 percentage point plus gain on the benchmark indices for the week so far. And this was a big week, the election week, and the benchmark indices have scaled a 2.5% return. And now I think we're going to start that countdown once again to our all-time high levels. 23,338 was the all-time high level on the Nifty, and we're just about 250 points away from that level. That's what, 1.1% away now. Not
Absolutely.
too far with the way we're moving up.
That would be quite something. I mean, to end this week at a fresh all-time high would be a statement. But, you know, just to take away from what the RBI has done, frankly, we'll ask our, experts, market experts this, but the policy didn't have anything specifically dovish. Nothing has changed. Rates haven't changed. The stance hasn't changed. Yes, the outlook on GDP growth has been revised higher. 7% becomes now 7.2% for FY25. The inflation forecast is unchanged at 4.5%. So not much, if anything, actually. There was a sense of hawkishness, not on monetary policy, but on unsecured lending, with the RBI saying that the central bank is watching the incoming data very, very carefully, monitoring this data. And he acknowledged the fact that there has been some reduction in unsecured lending. And he said that, more actions could be taken if warranted, depending on incoming data on unsecured loans. So if anything, it was, slightly on the edge, so to speak. And of course, there was some mention of improving governance standards as well. He spoke about how regulated entities, are still not disclosing all the information in the key fact statement which comes with a loan. So at the margin, I mean, there's no talk of any major bazooka from the RBI, at least not in terms of that language. But it seems that the market is moving on its own terms. And I think, Reema, it's more about the overall sentiment, sort of moving away from the slam dunk of Tuesday and perhaps starting to get a little hopeful and positive as we're looking at government formation, as we're looking at the allocation of the all-important portfolios. And maybe this is positioning, with the assumption that there will still be policy, continuity. And there won't be too many knee-jerk changes in terms of, what Modi 3.0 will deliver. Because this is a green-looking screen. Banks were underperforming, they still are, but they've kind of caught up. But yeah, the Nifty and the Midcap index looking very good with that 1%.
As one of the guests had said, that we may not see big bang reforms, but policy continuity should definitely be there in the next 5 months. And that perhaps is enough, even if we don't get, big reforms. But, I think the surprise winner of this week has been IT.
Oh, yes.
The first half of the week was all about FMCG and the comeback of consumption spending, rural demand. But IT has now been the best performing sectoral index. Today it's up 3%, and this week it's seen a gain of 8.2%. And IT at current levels is the best performing sectoral index, followed by FMCG, which is up 6.1%. So this whole Nasdaq rally, Nvidia move may have had a rub-off impact on the Indian IT stocks. But let's begin Trading Hour by focusing on the markets following RBI's decision. We invite Ajay Srivastava, CEO of Dimensions Corporate Finance Services, to take a few questions. Ajay, morning. What do we start with? The way the markets have been whipsawed and now firmly up post the budget. The slam dunk on Tuesday, now the RBI policy. Take us through your market construct at this level. What have you made of the action, and how would you approach it?
I think it's been Reema, it's the best wake-up call investors could have had, because it was becoming so easy, the dartboard approach, buy what you want. And I think that one-day correction brought in a lot of reality to the market, that things can happen. And when they happen with a vengeance. And which also tell you the Indian market is today sitting on a lot of leverage positions, because what happened that day was clearly leverage positions getting cut left, right, and center at market. So therefore, one should be cognizant that if one is investing at these rates, nothing wrong with, economy will continue. But what we came away, take out, I don't think the RBI Credit Policy Committee has understood the mandate of the people. The people's mandate was against inflation, really. It hurt everybody and the common man more and more. And what I heard today is that inflation is not going to come down as per RBI policy at 4.8%, but there is a move by external members to say rate cut. That's not good news. RBI needs to be really focused on inflation reduction. And if it doesn't happen, this long-term rallies do fizzle out in the end, because inflation raises an ugly head and the political realities will start to catch up. Therefore, I think we are at this level, most of us are invested well into the market. We don't think there's a need to take further position in this market. If you got cash, at least 20% cash, hold on to it, and just wait it out, because I can see very clearly our analysts are telling us the leverage positions are getting built up rapidly again, and that is what happened 3 days back can happen anytime. So keep some cash handy. People who had cash on that date reaped a good dividend. If you didn't have cash or leverage and you were cut, you know what happened next morning. You were really very, very poor. So I would say, recommend very clearly is, I think, hold your positions today. Do not try to invest beyond 23,000 kind of indexes at this point of time. Let's wait for the budget. Let's see where it goes. Let the formation come through. There'll be enough time to invest. And FOMO is dead, as we all know.
And that's exactly what this market has been, made of. FOMO, right? FOMO that's making people buy stocks at 80 times, 90 times, and what have you. By the way, 11 o'clock is also the NDA meeting. I think it's taking place in the Parliament Hall, where all the allies are coming together, and then they'll discuss sort of the next steps. And we'll get you more on that as we go along. But Ajay, hi, it's great to have you with us.
Thank you.
How do you navigate a market like this? You have a big event, you have a bit of a shakeout. It lasts for one day, and now you're talking virtual all-time highs again. And this happening when FIIs are still selling, and that's my only concern, and I want your perspective on this, because that's a massive wall of selling that is still hitting us on a daily basis. And yesterday, domestic institutions didn't absorb all the selling. So it's very clear that retail and HNI is also buying. I don't know, does it make you feel nervous? How do you look at this?
I think the best people were who were away on a holiday on the election day, if you ask me, result day. Those guys came out the best because they didn't have to take a call either ways. So, that's why I said in this market, one has to be careful, to cognizant of the fact that you got to take some money off the table. You got to be clearly invested in certain stocks, and over leveraging in this market is going to be a disaster, if you ask me. Definitely a disaster. So if you are out of the market and you want to now buy futures and options, I think that's not a smart idea to be. Doesn't matter. At the end of the day, the fundamentals count. At the end of the day, P's count. At the end of the day, realities come into play. And we cannot be not aware that now we have a government which has to respond to two key issues in the economy, which is inflation and income diversity. That has to be acknowledged, is thing on the table. And if we thought it's going to be business as usual, I think they'll be fairly disappointed in the next 12 months to see that the government has now, whether it is a positive or negative stock market, I don't know. But I know for sure is not going to be the business as last year, because two issues on the table: inflation, which RBI did not address today, it kept it at 4.8%, and income diversity, the divergence of income which is taking place is there. So you have to calibrate yourself. As I said, you have to now very clearly book some profits. You have to very clearly, and when you say FIs are selling, it makes prudent to sell into the market which you yourself quoted, shares at 100 Ps, 200 Ps, 300 Ps. They may still go up. Nobody's arguing against the fact that it may not go up or the stock market. But the fact is, traditional wisdom, which is old age wisdom, which may not be applied today, says money in the bank is worth more than 2 in the stock market demat account.
I don't think many people have agreed with that theory, Ajay, and they're brave hearts, kudos to them. They like living on the edge, but I think it's been all about buying every dip, no matter if it is at all-time highs, and people are buying at all-time highs. The dip is 2-3%, right?
No, dip was not 2-3%. You saw what happened that day. The dip for 15%
on Tuesday, yes.
Stocks.
Yes, on Tuesday.
The 15% stock. So, that's what I said. If you bought in cash, you got cash on the sideline, you can stay through the market. But if you're in leverage positions, and leverage position margin, you can't replenish like instantly in 1 second, you can't replenish market. Your position gets cut by the broker. And that's where the danger lies, that what we have seen in the last 48 hours is built up of futures back to where it was. And the numbers are coming out very clearly, showing that in every stock, we're seeing future build-up taking place. A lot of expectations. And I keep saying one thing, that if you made money, use the money, enjoy the money. There is no point of making money, seeing it disappear, seeing it come back, and then sitting on a sleepless night saying, what's going to happen on the budget day? So comfort of exposure is very important. I think all of us are sitting on huge profits at this point of time. You can add on. Let's take the margin at 23,000. You buy a Nifty. What do you expect to get? Maybe 2%, 3%, maybe 5% at the end of the day, right? Is that worth the risk that you run today? Or you carefully nurture your positions, wait for what happens in the market, wait for a good correction, and then go in. runaway trains have a problem most of the times, and to expect that the interest rates are going to come down. I don't think it's the unwarranted optimism in the market that we are in. Inflation demon has to be slayed. Savers have to be rewarded. RBI governor actually alluded to the saying, listen, get your deposit things in order, which is really telling the banks that you've taken people for granted by not offering rate of return, so they're taking the money to the stock market. You give a decent rate of return, money will come back from the stock market to you. And I think it was very clearly said in the speech today that RBI wants deposit rates to go up in the market. So when deposit rates go up, you can't expect interest rate for lending to go down and banks to compress time. That won't happen. I think the scenario is going to be interest rates are going to go up in the economy in the short term further. I don't think there'll be rate cuts, and you need to be your positioning of the stock market portfolio should be clearly aligned to what the government is going to do, which is I think is going to be very clearly a lot of it is going to be consumer focused. It's going to be GST rationalization. I think is the key driver for this market, and I think we should wait and see whether the two-wheeler GST rationalization takes place, because that's a first trigger for textiles, garments, and is going to be two-wheelers. With that should tell the intention of the government.
So tell us how to construct a portfolio, right, at current levels. You spoke about GST rationalization, so that would put the spotlight in two-wheelers, textiles, etc. What else should one have in their portfolio right now? And where would you book profits?
I think it's going to be more and more defense at the end of the day, because that's the trigger is going to be, because our exchange rate under is not the best, healthiest exchange rate at this point of time. So defense remains a consistent theme. I don't think it's a thing. Capital goods, you can't switch off. It has to continue. When the plant starts to set up, it'll need the boiler, it'll need the system, it'll need the power. Power sector, I think, would be the biggest winner in this year, because that is where the major focus has to be. The demand supply is changing, the dynamics are changing, and at the end of the day, we need more capacity with this transmission. So I think power, capital goods, two sectors, defense, and these are old sectors, nothing new I'm saying, but these should continue to get priority. While at two-wheelers, tractors, I think on the agriculture side, all the input companies are, I think, going to see a decent bonanza, because that's where the government would possibly focus, given the realities of the political situation at this point of time. So agri inputs companies, agri-related tractors, tillers, I think they're going to have a swell time at this point of time. And of course, the best part is India has so many restructuring stories, so many demerger. If you look at the largest groups, they are doing demergers and bringing in businesses, whether it's Reliance, Grasim, whichever it is. And I think those stories will give very good returns to the people at this point of time. So, nothing changes very much, but what changes is some new things may pop up post GST rationalization, post the government's new stance in the budget.
Okay. All right, Ajay, we will have to leave it on that note for today. Thank you very much. We are in very interesting times, and we look forward to more such conversations with you in the near future.
Good day.
Thanks for joining in. All right, we have to take a quick break. Let's take that break and come back on the other side and get Mitesh back in. The market has been surging in the last 1 hour or so. So good time to talk about some more trading ideas.
It's an IT day today. The IT index is up 3%, and one of the big movers is Mastech. Now, the news here is that the company has a consumer experience platform. It's called ICX Pro.
That's not what caught my eye. What caught my eye was there's some NVIDIA link, right?
So basically they have a platform, and that platform they have upgraded by using NVIDIA's computing prowess, right? So this platform is now so much more superior. So that's the key development. The company is saying that the platform will now enable development of generative AI applications for enterprises. So enterprises can now use this platform to come up with their own Gen AI applications depending on their domain. And they've said that this has reduced customer response time from 3 to 7 days to a second. That's the extent of let that number come up. There you have it. Reduce the customer response time from 3 to 7 days to a second. So they're seeing a lot of potential for this particular in various sectors. So it could be in manufacturing in particular, where one of the use cases or test cases showed that they've demonstrated a 20% return on capital. They see a massive potential in manufacturing, BFSI, and the healthcare sector. So that's gotten the street excited that one of their platforms is now been advanced with the help of NVIDIA's computing capabilities. But the other stock which is on our radar is Wipro, because the company has won a large deal, a $500 million deal from a US communication service provider. The company has not named the client, but it's a $500 million spread over 5 years. It's a net new deal, and therefore the incremental revenue addition, we can estimate it. They've not given it by the company, but we can estimate it to be about 0.8, 0.9% this year. And this is the first major deal under the new CEO, Srinivas Palya. That's the Wipro update for you, the IT update, Mastech and Wipro on our radar. But let's invite Mitesh Thakkar now for a quick technical check on the markets. Mitesh, firmly above 23,000. Is there a trade that you would recommend?
In fact, I didn't expect 23,000 to be crossed so easily. So maybe not, but on the indices, I think the bank Nifty could be a buy if we get spot levels of around 49,430, which is roughly about 150, 200 points lower. Then we want to take a long with the stop below 49,000. And on the stock side, I have a buy on Sun TV with today's low as the stop loss. 709 is the stop loss, 755 is the target. And that apart, I think, we've been recommending a lot of IT names, but now I think SBI Life is also coming to, SBI Cards is also coming into a buy zone. So buy here with a stop at about 709 and look for target of 745.
Okay, got that, Mitesh. Thank you very much for those ideas. We'll come back to you later in the afternoon. Let's see how the day progresses. We do have to take another quick break on that note. We'll come back on the other side and put the spotlight on a couple of stocks that are buzzing specifically because of the hope and expectations that there will be a lot of developmental activity now in Andhra Pradesh. So what are these stocks and what's the fundamental input around them? We'll tell you. Welcome back. You're with us on Trading Hour. As promised, let's get to that analysis on companies and stocks that are linked to Andhra Pradesh. And with Mr. Chandrababu Naidu now all set to become the next Chief Minister of Andhra Pradesh, the street is betting on Naidu's pro-development focus. And this is leading to excitement on a lot of these stocks. We have Nigel with more details. He's been tracking quite a few of them right from the 4th of June, Nigel.
Well, that's right. We had highlighted about KCP having some exposure to, the belt. That's Andhra Pradesh as well as Telangana. And that stock did very, very well. So we said, let's delve a little bit more into it. Now, Mr. Naidu is set to become Chief Minister yet again. And expectations are that the TDP government, they'll go ahead and they'll revive that Amravati capital plan. Remember, it was talked about in his last avatar as well, or his last tenure as Chief Minister. So they believe that things will be back on the table. And that's why, in fact, you're seeing that some of the cement stocks are rallying. Now, that's the broad number you should be looking at. The biggest name of the cement industry is obviously UltraTech Cement. But in percentage terms, the exposure to AP Telangana is relatively lower. Ramco Cement's close to around 30% of their total capacity is in Andhra Pradesh as well as Telangana. So that one should be on your radar as well. Could explain why the stock has bounced off quite well in the last 2-3 days or so. And Sagar Cements, KCP as well as NCL, they are smaller players, but bulk of their capacities are in this region. And that's why the street is getting excited about them. On a valuation parameter, UltraTech obviously it's the king. So that commands higher valuations. Ramco Cement, I recall at one point of time used to trade at around $150, $160 per ton. Now, in fact, it trades at around $120 per ton. So on a valuation basis, it's relatively more attractive provided demand comes back. And Sagar as well as NCL, well, they are trading at mouth-watering valuations, as was the case with KCP. Giving you a couple of inputs on each of these companies then. Sagar Cement, the enterprise value on a per ton basis is $49 per ton. The sales volume guidance that they've given is around 6.5 million tons. And some part of the street is very disappointed. When you have capacity of more than 10 million tons, why are you giving only 6.5 million tons? But with this sort of a move coming in and if development, comes to the fore, particularly in Andhra Pradesh, well, then they could very well go ahead and achieve these numbers. And what's more important is they have a capacity of around 10.5 million tons, which is going to around 11.3. So in case there is big development, they already have the capacity to go ahead and sell their cement as well. The street, though, is waiting for some clarity on a 100-acre land that they have. That was the one that came in with Andhra Pradesh. So that's a trigger because that could bring in close to around 400 crores at around 4 crores per acre. Moving to NCL Industries, another small player and more than 85% of their total revenue mix is coming in from cement. The boards and the RMC business, they're profit making, but that's too small, so we're keeping that out of it. And those which is only around 1% or that's actually currently not making any money. But for the time being, we're focusing on their core business, which is on the cement business. Now, out there, they're expanding capacity from around 2.7 million tons to around 3.5 million tons. In the last couple of years, they have been talking about this, but in the in the previous government, they couldn't go ahead and increase their capacity. Now they've got their clearances, so by September 2025, the capacity will go to around 3.5 million tons. And not valuing the other smaller businesses, but just taking the total enterprise value, it trades at an EV per ton of around $41 per ton. So that as well is quite attractive. So that's another company that you should keep on your radar. And just to recap what we already explained to you earlier in this week, KCP, the capacity is around 4.3 million tons. They have a sugar capacity as well in there. And the total consolidated EV has now moved to around 2,500 crores, 3,000 crores of market cap. You deduct from that the net cash of close to around 500 crores. Now, just solely valuing the cement business itself, if you give it a value of around $70 per ton, then the cement business will be 2,500 crores. That's at the upper end. When we covered it earlier, it was at around 1,800 crores. Now, KCP, besides having a cement business, they have a lucrative business in Vietnam where they're making a good amount of revenue as well as EBIT. So that one, in fact, that explains why that's been one of the biggest movers. So keep an eye on some of these cement players. For the time being, the street believes Mr. Naidu coming back will be pro-development. And that's why all these companies, they are up anything between 8 to 10%. KCP is in a league of its own. All of them are higher in this past week itself. Back to you guys.
Okay, thank you very much for that. He was also seen as quite the tech CEO. He was very bullish on technology. He managed to get many of these large MNC technology companies to set shop in Hyderabad, because that time it was only Hyderabad, which was the capital of it was not divided between Telangana and Andhra Pradesh. So he made Hyderabad the tech big technology city, and now the expectation is that once again he could mobilize
and
forces
Rima,
for
just
that.
to quickly put in, because we need to wrap up, but just to quickly move in as well, even some of these infra related companies, they believe development is going to be very, very high. There's not going to be any pending funds, and they're bracing for huge orders, which explains why some of these companies have moved up as well.
Okay, thank you very much for that. Get into a break. On the other side, Dhaval Gada from DSP Mutual Fund will join in to talk about the trends in the BFSI sector.
Welcome back. You're with us, and we're coming to you from the CNBC TV18 HDFC Sky Election Headquarters, and you're watching Trading Hour. Well, the RBI policy statement has just gotten over, and there's been no change in either the stance or on the rates per se. But there are some interesting tidbits in the beyond monetary policy announcements. For instance, the definition of bulk deposits, that's been changed from 2 CR to now 3 CR. And the RBI governor made some very interesting references to unsecured lending and how the RBI is watching that, quite carefully as well. Let's discuss some of these trends with our next guest. We have Dhaval Gada, Vice President of DSP Mutual Fund, who's joining in. And Dhaval is someone who manages DSP's Banking and Financial Services Fund. So you're a great person to have on a day like today to talk about what lies ahead, Dhaval. Thanks for joining in. So before we talk about your holdings, the fund and the positioning, let's get your reaction to the policy out of the way. What did you make of it? Specifically, some of these nuances, the reference to unsecured lending and this change in definition of bulk deposits. What do you think it changes, if at all? I mean, anything at the margin?
Yeah, so I think, from a rates perspective, we expected unchanged stance and the policy rate. And the key focus was supposed to be on the, guidelines around unsecured, around loan to deposit ratio, around other aspects of regulatory action that we've seen over the last 4 or 5 months. And from that perspective, not surprised that RBI has again reiterated its stance on some of these aspects. And so from that perspective, I think the only change is that RBI has again hinted that some regulated entities are not following their guideline on key fact statement and the loan to deposit moderation that the regulator is seeking for. So that we will watch out for this. As far as bulk deposit is concerned, On the margin, I think it sort of is a refresher from earlier change. So it moved from 1 crore to 2 crore a few years back, and now from 2 crore to 3 crore. In terms of its impact, we may see some bit of increase on the rates, especially on the bulk side, given the overall framework of having a deposit growth being higher from where it is right now. So on the margin, it should put some pressure on spreads over a period of time.
Interesting. So you're saying this increase in the bulk deposit definition, that will cause maybe some margin pressure, because obviously banks will offer higher rates there, and there's been a lot said about the scramble for deposits. Any guess right now in terms of how much pressure on NIMs because of this move alone?
Difficult to quantify only because of this aspect. I think if you look at the broader theme, the regulator wants banks to have a faster deposit growth, or the gap between credit growth and deposit growth should be lower than where it is right now. And from that perspective, the idea is to make it more attractive for depositors both on the retail and the bulk side to sort of mobilize deposits. So net, the direction of the regulator is only going to increase margin pressure, because the credit to deposit ratios from where they are likely to move downwards versus upward trajectory that we are seeing for the last year and a half.
So not for this move itself, but in general, I mean, what are you factoring in? How much of a margin compression are you factoring in because of other reasons as well? Because of the scramble for deposits, because while that sort of puts an upward pressure, there's the overall expectations of rates coming down as well. So what is the margin compression you've right now penciled in for NBFCs and then for banks?
So from NBFC's perspective, we expect about, depending on each model, but broadly, I would say 25 basis points of decline for the larger names from where we are at the end of fourth quarter. And as far as banks is concerned, 10 to 15 basis points of decline for FY25, with assumption that the rate cut cycle begins at the end of December or February. So back-ended rate cut cycle. So those are broadly the thought process on margins for both banks and NBFC.
So 25 bips compression for NBFCs, and banks, you said? Sorry, I missed that number. 20 basis points.
10 to 15 basis points.
10 to 15 basis points. Okay. So that's sort of the immediate impact in terms of policy announcements. Just one more piece on unsecured, Dhaval, because we heard the RBI governor very clearly give a reference to this again. He did say that overall, loan growth in this segment has come down, but the central bank is still watching and will take more action if warranted. Could this be an issue? Could this be a challenge with respect to, further pressure on loan growth?
So actually, I don't think, from where we are, there is going to be further pressure on unsecured credit. So if you look at the journey over the last 3 years, post-COVID, we did see significant uptick in unsecured credit growth. And at a system level, we moved to about 30% kind of credit growth, which is when the RBI came quite heavily in terms of first their commentary and then steps in terms of risk weight increase and other specific measures to sort of calibrate this upward move that we were seeing. And over a period of time, we were expecting this growth to moderate, given the base effect that would have caught up anyways. So where we are is close to around 20-21% kind of growth at a system level for unsecured credit. And for next year, we do expect this to converge close to broad system credit growth, give or take about 4-5 percentage points. So it will be most likely sub 20% next year. So directionally, we are moving in the right direction from a regulatory standpoint, and I don't think there will be too much change on that count, unless the regulated entities go quite aggressive again, which looks very unlikely at this stage.
So next year, you're saying FY26, that's when unsecured loan growth should fall. Sorry?
FY25, we expect it to be sub 20%.
Yeah, I was just checking because you said next year, so was wondering which one you're referring. So 25 is what you're talking about. By the way, Dhaval, we have you actually on a great day, because we are just getting details on the Bajaj Housing Finance IPO as well. I think there were some flashes there, and the size of that issuance is going to be about 3,000 crores. So that's the next big development. What is your stance on housing finance companies? What's the outlook, and what do you think this kind of a big IPO will mean for the sector?
So first on the sector, we expect the growth moderation that we had seen in housing post COVID to sort of come back and be in around the mid-teens kind of level. And given the government's thrust on housing, we do expect this growth to sustain for a few more years. In that context, in the large housing finance company space, we did see one large merger in 2022, and this space is largely there's a gap in the listed universe at this point of time to play a large prime or super prime housing space, and from that perspective opportunities are limited, and therefore some of these new offerings would be quite attractive, assuming the valuations are in a reasonable zone. So that's broadly the thought process. Overall, very constructive on housing finance as a space, and within that, prime and super prime is a very good opportunity to look at.
Okay, well, I'm just telling our viewers that Bajaj Finserv and Finance both are big holdings for the DSP BFSI fund. Bajaj Finserv, the weightage is about 9% in the portfolio. Bajaj Finance, the weight is about 5% in Dhaval's portfolio, in both those stocks in focus today. Bajaj Finance, of course, doing really well. Now I'm looking at the rest of the portfolio as well, Dhaval, and obviously, lots of big private sector banks which form the bulk of your HDFC Bank, ICICI Bank, Axis. You do have exposure to some of the smaller PSU banks. But let me ask you a broader question. Where will money be made? That's what everyone's looking at now. Is it going to be time for private sector banks? Is it time? Is it time to, let's say, unload a bit of the PSU and move that money to private sector? How would you approach it?
So, I mean, my portfolio construction has been very stock-specific, bottom-up, and therefore, when you look at active weights in the portfolio, they are in the names that you mentioned, the Bajaj Finserv, REC, those are big active weights in the fund. And so, broad thought process is, we expect corporate credit growth to see very good momentum. We've seen last 2 years being quite good. After a drought of 8-9 years, we've seen corporate credit growth come back, and we expect this cycle that we are in with the thrust that the government has put on capex. We expect this trend to continue, and therefore that's one area where we think there's still value, and we're quite constructive around that space. The other pocket that we are quite upbeat on is diversified NBFCs, where we think there is a case where with the uptick that we are seeing in GDP growth, last year also we saw a revision upwards, and in the current year as well, based on RBI's forecast, we are seeing an upward revision, and similarly we've seen that in credit growth as well. So we do see a case where growth compounding is going to be quite strong in some of these diversified NBFCs. Coupled with the rate cycle benefit, the earnings compounding can be even stronger, is our thought process over the next 2-3 years, and therefore that is one more area that we are quite constructive on. At a broader level, the large bank space, I think they are very reasonably priced at this stage, and therefore they become the anchor of the portfolio, where we expect them to at least give market or market plus a few percentage point return and give stability to the portfolio.
Okay, all right, Dhaval, good talking to you. Good conversation. Thanks very much for joining in, and we look forward to more of these in the future. All right, well, on that note, we do have to take a quick break with the news that the market rally is going from strength to strength. Look at the Nifty now. It's a 350-point up move. It's a turbocharged market, and a market which is now less than what? We're talking about 200 points, from less than 200 points from fresh all-time highs. Turning out to be quite a session today. We'll take a break, come back on the other side, and also tell you what's happening in the commodities world.
Welcome back. Manisha is now joining in, and this time she's going to be focusing in on the progress of the monsoon. Hi, Manisha.
Well, the good news as far as monsoons just about continues. Well, there were concerns of monsoon stalling or the progress slowing in the previous week, but that seems to be really picking up right now as there are cyclonic moves there. So we are looking at 1st to 5th of June monsoon. Overall, India 7% above normal. The IMD says that the monsoon progress further is into parts of Karnataka, Maharashtra, Telangana and Andhra Pradesh as well. The IMD also says that the conditions are now favorable for the advancement of monsoon into Mumbai, Telangana, South Chhattisgarh, South Odisha and also west central parts. There actually is an orange alert for heavy rains in various parts of the country. That is from 8th and 9th of June. This is in Goa, Konkan, Madhya Maharashtra, Karnataka, Assam and Meghalaya. While there are concerns, of course, in some parts of the country as far as heat waves as well goes, and this also is an advisory till 9th of June in parts of Uttar Pradesh, Madhya Pradesh, Bihar and Jharkhand where the temperatures are above normal. But the southwest monsoon is now looking to enter Mumbai in next 2 to 3 days. The monsoon has reached parts of Kolhapur, Satara and Ratnagiri within Maharashtra as well. These are areas not too far away from Mumbai. There also is, by the way, a yellow alert for Mumbai on 10th of June, not just in Mumbai but in Thane and Raigad as well. So the monsoon progress does seem good right now, and the expectation that the month of June could be looking at a monsoon average anywhere between 92 to 108% on the higher side seems to be happening as of now.
Okay, all right. Thank you very much. Waiting for those rains, Manisha. So you're bringing us some good news there. Let's take a quick break. We'll come back and towards the end of the show, we'll bring you the latest from New Delhi. All the political developments as the NDA's big meeting with all the allies is underway in Parliament. It's a bull charge on the street. The Nifty is moving very swiftly and we are almost now talking 380 points. In fact, the index has just now crossed the 23,200 mark as well. So this is absolutely incredible. We're 135 points, 137 points away from fresh all-time high. Some serious momentum in the market. Well, on that note, let's move on. And as promised, head to New Delhi. We have, of course, our colleague Parikshit joining in to bring us the latest in terms of that big NDA meeting. We're seeing some of that footage come in as, of course, the next steps in government formation take place. Parikshit, what's happening today?
All NDA leaders and elected MPs have arrived in the Central Hall of Parliament. They are meeting to discuss the way ahead, and all MPs, all NDA leaders have given their support to the BJP-led NDA to form the government. Key allies here are the JDU, the TDP, the Shinde Sena, the LJP and other parties as well. Now, all of them need to be accommodated in some way or the other, and there is a hectic negotiation taking place in the capital. Portfolio berths have not been finalized as yet, but we've been given to know that both the JDU and the TDP are asking for 4 to 5 portfolios each, and both these key allies have asked for important ministries related to transport, infrastructure, railways, rural development, industries, and agriculture and farmer related ministries as well. So it's going to be difficult for the government to accommodate all these demands. Now, there are some reports that the TDP has sought the Speaker's post, but we're given to know from our sources that the BJP would like to retain the Speaker's post with itself. The swearing-in ceremony will take place in the evening of 9th June. At least 5 foreign leaders, heads of state, heads of government have been invited for the swearing-in ceremony. This includes leaders of Maldives, Sri Lanka, Bangladesh, Nepal and Bhutan as well. So it's going to be a very important ceremony, and the Prime Minister, the BJP would like to give due importance to all the allies here as well.
Thank you, Parikshit, for all those important details. With that, it's a wrap on Trading Off from the entire team. Thank you for watching. Stay tuned. Halftime Report is up next.